What is a unicorn? In our first two videos, we followed the startup journey from identifying a problem to building an MVP, finding customers, achieving product market fit, raising funding, and scaling the businesses. Now we come to the biggest question: how does a startup become a unicorn? The term unicorn is used for a privately held startup that reaches a valuation of 1 billion US dollars or more. But here is the important part: a unicorn is not necessarily a company that has $1 billion sitting in its bank account. Valuation is an estimate of what investors believe the company is worth based on the factors such as growth, revenue, market opportunity, technology, customers, and future potential. So imagine a startup that is growing extremely quickly. It has a million of users, strong revenue growth, and operates in a huge market. Investors may believe that this company has the potential to become much larger in the future. They may invest money at a valuation of $1 billion or more. At that point, the startup becomes a unicorn. But reaching that number is not easy. The company needs to show that it can grow beyond its initial market. It needs a strong business model, a large customer base, and the ability to work complete. This is why unicorns are rare. Thousands of startups may be created every year, but only a small percentage reach billion-dollar valuation. The journey requires the right problem, the right product, the right market, strong execution, funding, and timing. And even after becoming a unicorn, the journey doesn't stop. The company now has an even bigger challenge. How do we continue growing? The growth behind a unicorn. Becoming a unicorn is not just about reaching a billion-dollar valuation. A startup needs to demonstrate why it deserves that valuation. One of the biggest factors is growth. Investors want to see that the company is gaining customers, increasing revenue, expanding its market, or developing technology that could create significant future value. Let's imagine two startups. Startup A has a good product and earns 10 crore every year, but its growth is very slow. Startup B is growing rapidly, entering new markets, gaining customers quickly, and increasing its revenue every year. Investors may be willing to value Startup B much higher because they see greater future potential. This is why growth is such an important part of the unicorn journey. Another important factor is the market size. If a startup operates in a very small market, its growth may eventually be limited. But if it solves a problem faced by millions or even billions of people, the opportunity can be much larger. Technology can also help startups scale quickly. Digital platforms can reach customers across different cities and countries without requiring the same physical infrastructure as a traditional business. But growth comes with a risk. A company that grows too quickly can face cash flow problems, operational challenges, poor customer service, or internal management issue. So unicorns need more than just speed. They need strong leadership, talented teams, efficient systems, and a business model that can survive as the company becomes larger. And when a startup successfully combines a valuable product, a huge market, a strong growth, and effective execution, its valuation can rise dramatically. But there is still one final question: what happens after a startup becomes a unicorn? What happens after becoming a unicorn? So, a startup has reached a valuation of $1 billion. It has officially become a unicorn. But surprisingly, this is not the end of the journey in many ways. It is only the beginning of a much bigger challenge. Once a startup becomes a unicorn, expectations become much higher. Investors expect continued growth. Customers expect better products. Employees expect a strong leadership and opportunities. And competitors are watching closely. The company now has to prove that its valuation is supported by a sustainable businesses. Some unicorns continue growing and eventually become companies worth tens or even hundreds of billions of dollars. Others struggles because their growth slows down or their business model doesn't work as expected. This teaches us an important lesson. Becoming a unicorn is not the same as becoming a successful long-term company. A startup can raise billions in funding and still fail if it cannot build a sustainable business. The strongest companies focus on creating long-term value. They continue improving their products, understanding their customers, controlling costs, developing their teams, and adapting to changes in the market. So, if we look back at the entire journey, becoming a unicorn follows a series of important stages. First, find a problem. Second, create a solution. Third, build an MVP and test. Fourth, find the product market fit. Fifth, acquire customers and generate growth. Sixth, raise funding and use it strategically. Seventh, scale into a larger market. And finally, build enough value to growth potential to reach $1 billion valuation. The biggest lesson is that unicorns don't appear overnight. So, the next time you hear the word unicorn, remember it isn't just about the $1 billion number, it's about the journey that made that number possible. Thank you. We'll see you in the another video.